I am Peyton Theodore. I'm COO of LawCloud. At LawCloud, we specialize in helping regulation crowdfunding platforms and issuers file forms with the SEC, including Form C, Form ID, and Form CAR, which we're going to be talking about today. And Benji's going to lead us off explaining a little bit about what Form CAR is, who needs to file it, and give us an overview of the SEC rules. Welcome, Benji.
Hi. So the first thing I have to do is do what you guys all love to hear from lawyers, is just to remind you that I'm just providing a general overview of the rules and discussing those rule requirements, and nothing that I say today should be construed as legal advice. The rules can be kind of complicated to apply to different facts and circumstances that arise. So I really encourage everyone on the call that if you have specific questions, please get advice from an experienced attorney when trying to raise capital or complying with the various rules and regulations related to doing that. So that's my little spiel. I'm going to move on. So what is Form CAR? It is the annual report that is required to be filed with the SEC and to be posted on your website or a website of your intermediary within 120 days at the end of their fiscal year. And that has to be accompanied with GAAP financial statements for the prior 2 years. Calendar year issuers, typically this deadline is April 30th. The deadline for this year is May 1st because April 30th is a Sunday. And that's kind of why we're talking to everyone now, is to help them get their ducks in a row. So that's what the form is. So who needs to file it? Any issuer that has offered and actually sold securities under Regulation CF, unless you have appropriately terminated your reporting obligations, and I'll talk a little bit more on that in a minute. So just a really kind of quick summary of what the rules require. The rules specify content by alluding to Rule 201 of Regulation CF, and it is basically everything you put into your original Form C, updated for the current status of the world, except you don't include issues specific to the offering itself, which is now kind of closed or not applicable in this annual report kind of update form. So formal information about the company, your officers, directors, bios, education, information about 20% beneficial owners of voting equity securities, a description and update of the business, employees, risk factors, capitalization, indebtedness, financial condition, all of that kind of stuff. The things that you don't include in the annual report is you won't be discussing what your target offering amount is, or the deadlines, or the price per share, or the structure of the deal, or uses of proceeds. So it's kind of take your Form C, eliminate the stuff that's specific to offering and selling those securities you sold, and then update it. Note that you need 2 years of GAAP financial statements that are certified by your principal executive officer, or if you actually have audited financials, you need to provide those. Just another side note that technically speaking, the rules also require you to amend your annual report during the year if there are significant material events. And that's kind of a case-by-case scenario, but one would think that if one of your founders left the company, or if your company is being acquired, or something, a significant corporate event, maybe even a material development in a product that you've made, could trigger that. But again, that's a facts and circumstance requirement. So that's, what it is, who needs to do it, and an overview. But before we get into items that Woody's going to talk about and Peyton's going to talk about kind of process, I'm going to talk about a couple nuanced issues that I want you to just recognize in this whole compliance concept. So Peyton's going to talk about how to get it prepared, and LawCloud has some great tools to help you do that pretty quickly and efficiently. But let's talk about who has to file. So you have to have offered and sold securities. So under CF, so that could include companies that actually are in the process of offering and selling securities today, not just people that closed their Regulation CF round a year ago. So you need to check with your attorney because fundamentally, no matter when your offering was launched, if it's current, if you're a calendar year company, your financial statements are going to go stale on April 30th, which means you need to materially amend your Form C or end your offering at that time. And I think you'll see a lot of people kind of make April 30th their de facto end of an offering date so that they don't need to update the financial disclosures, but you're going to need it in your annual report. So it's still a very important issue for you to be tending to right now. So unless you've terminated your filing requirements under Rule 202B, some issuers may be able to stop filing after their first annual report, or others may be able to stop filing after their third annual report, depending on the facts and circumstances. But I want to just highlight, this was something that Peyton and I and Woody were talking about earlier. You might take care and you might not want to stop filing your annual report. The first thing is that filing an annual report is really good investor relations. These are, people who have given your money, you're stewards of their money to do what you told them that you would tell them to do. And at least annually giving them, kind of here's the current state of the world and here's how we're doing towards our goals, providing that kind of update to your stakeholders is really great corporate practice. So even if you could terminate that reporting obligation, I think it's not a bad idea to continue to do it no matter what. But there's also some issues around trying to avoid becoming an Exchange Act reporting company. So there's this conditional exemption that prevents Regulation CF issuers that have more than $10 million in assets from having to register as an Exchange Act reporting company that requires, among other things, that you are current in your annual reports. Well, the SEC hasn't really taken a view on whether or not you can stay current in your annual reports and terminate that requirement. So there's kind of this concept of, if you have assets greater than 10 million or approaching that, or you think you might have it in the future, and you have a significant number of record holders, then the SEC's kind of taken a position here that they want you to provide them annual information and continue to do it unless you opt to become a registered 34 Act reporter, which you want to avoid. So, I think you should talk to your counsel about the pros and cons before you elect to terminate your reporting obligations, particularly if you have close to that 10 million in gross assets, or you think you might in the future, or you have a number of record holders. Filing has an expense, but it has a good effect too, which is great corporate communications. Just also recognize that failure to comply or not providing the appropriate information in your Form CAR can also make you ineligible to use Regulation CF or Regulation A in the future unless you kind of repair your filings. And I just want to give just a specific call out to financial statements. So financial statements in a Form CAR, you need to do 2 years of look back. They need to be GAAP. So that means QuickBooks printing out your P&L is not enough. Cash accounting isn't GAAP. Tax accounting isn't GAAP. And GAAP requires that year over year comparative numbers. We want to see a table that has 2022 and 2021 identified together. So it's a real important area, and I think the certified financials can be an area where we see a failure of compliance. And I think Woody may be talking a little bit more about the data that we're seeing, but that's kind of my legal overview. The deadline's coming up end of April. It will take some prep to get it ready, particularly your financial statements. And most people have the obligation to do it and talk to someone who understands the rules before you decide it's not your requirement to comply. And that's kind of, and LawCloud can help you do it.
Thanks, Benji. That's great. And I'll invite everyone who's listening to put questions into the chat. We're going to save the questions until after Woody speaks as well. But if you have any and you don't want to forget them, feel free to add them into the chat. And then we're going to segue into Woody, who's going to talk about compliance, why it's important. And I'm also going to share a link to his compliance tool so you can look into your status.
Thank you, Peyton. Benji, that was amazing. Thank you so much for that. I even learned a few things, even though I was there when we wrote the law. So it's always refreshing to come back to the nuances of it. I can't reiterate enough what Benji was talking about in terms of good practice when it comes to these annual reports. I remember when we were sitting in Senator Merkley's office late at night talking to Andy Green, and we were talking about, how do we protect investors so that they have, they know how well a company's doing. And I gave Andy a personal story. When I was running a company that I co-founded by the name of Flavor RX, we flavored medicines for children so they're more compliant. I did a friends and family round and raised money from these friends and family. And I decided, you know what, I need to bring them on board as advocates and marketing agents for the company. So I did quarterly reports to them, and I just made it up. I was just like, well, they probably need to know what our sales have been, what our sales targets are for the next quarter, where I need help from them in terms of marketing. And I did this one-page, really simple template. Y Combinator's got a similar one out there right now. And I sent it out on a quarterly basis, like 15 days after the end of the quarter, to all my investors. I then went out to do 3 rounds of financing from venture capital firms. And I tell you, the one thing that got all of them to say, here's a check for whatever you need, was when they saw that I was sending these quarterly reports out to the investors. They're like, who told you to do this? And I was like, no one, I just did it because I really wanted to have our investors on board. And they're like, wait, so you're just doing this on your own to keep people informed about what's happening? I was just like, yes. And they're like, private companies don't do this. We have to struggle to pull this information out of them. And the fact that you're giving it to us makes us really believe in what you're doing. So the transparency led to the dollars. And I think that's the moral of the story, particularly when I was sitting down with Andy Green, talking to him about how do we keep investors informed and why we should have these annual reports. It wasn't meant to be a burden on the issuers when it comes to it. And that's why we're replicating a lot of the data fields that you see in the Form C in your initial filing and really updating those. And so, if you don't want to do it on your own, that's where LawCloud comes in. I mean, they've built this phenomenal service to really facilitate the process so that you can focus on your business. They can focus on the compliance side of things. You can be in compliance with it. And at the end of the day, your investors are going to be informed about what you're doing, and it'll probably lead to more capital. That's the more capital thing is just what I'm really focused on, because I think if you do stuff like this, as Benji was saying, it's best practices. You're going to look smarter. At the end of the day, it's cheaper to comply than when enforcement actions do begin. You just don't want to be on the other side of that. So let me just talk about, this tool that we developed. It's called this annual reporting compliance tool. And I think Benji shared the website for it. So it's literally, if you go to our Crowdfund Capital Advisors, it's the annual report compliance check. Now, let me just put some numbers behind this, what you're seeing here. So as of December 31st, 2021, so a little over a year ago, there were 2,235 companies that have been successful with regulation crowdfunding offerings. 2022, as crazy as a year as it was from a geopolitical and macroeconomic perspective, had the most funded offerings of any year of regulation crowdfunding. That number of successful companies actually jumps to 3,432. So that's 3,400 companies that need to file at least one annual report. Okay. So as Benji was telling you, there's timelines under which you need to do it. It depends on when you're a fiscal or calendar year company will determine the deadline under which it must be filed, but you need to have at least one in there. You do have the ability to terminate the reporting requirements. You do have to file a Form C-termination TR with the SEC in order to do that. And there's been 460 companies that have filed that form and have excused themselves from the annual reporting requirement. But when we look at our data of companies that have filed at least one initial report versus and take out those that have terminated the reporting, of that, 2,200 companies, there's over 750 that are out of compliance. That is a huge red flag, a huge risk for those companies. If the regulators decide to do enforcement actions, you might not be able to do another round of financing. You might have to rely on, forms of capital that are going to be much more expensive than regulation crowdfunding. And you might be precluded from doing, other types of Reg A or potentially even a Reg D, depending on how they, do their enforcement actions. State regulators also can step into the enforcement action sphere if you're actually not complying with the federal regulations and have, disqualifications and fines of their own. You just don't want to be in that boat. It's going to be easier for you to comply. So we built this sort of this website, and we take into all the companies that have filed, that have raised capital. So these are all successful issuers, the year that they completed their offering. So, if you completed it in 2021, well, then your first filing is going to be in 2022. So we've got the year of the deadline there to show people, and you can see when they filed their initial report. So you can see if you just scroll through, you can see, all the companies in here and who's really in compliance, and, someone that, only filed one report but hasn't filed again. But like 2020 Gen Systems is actually doing a decent job, and they filed up to 2021. They'll probably have the 2021 coming shortly. And so you have the ability to go in here and search for a company by just typing the name of it in the value here, and it'll filter the whole section down here for that company. If you don't appear, it could be that it hasn't, the company hasn't done any filings, and that could be a red flag for any investors that are coming to this dashboard and looking at it to see who is in compliance and who's not out of compliance, because that could, again, derail a round of financing. Or the company could have opted out. So there's reasons why, but people can reach out to us through Form C-AR@thecCAgroup.com if they've got questions about that. We do update this tool every quarter as companies do file the annual reports with the SEC. So it's always up to date on a quarterly basis. And again, if you have questions related to this, I would just say reach out to us. So that's all I have there.
Wonderful. Thanks, Woody. I know that for a lot of people, they hit the Form C, and that in itself is such a challenge to get completed. And then a lot of people aren't even aware of the annual reporting requirements. So Benji and Woody, thank you so much for all of that information. We will be posting a replay of this on the YouTube channel if you want to listen back. And I'm going to be sharing our discount code. The discount code is giving you the best price that you're going to get on the annual report for the season from LawCloud. As the demand increases, as the deadline approaches, the price will be increasing incrementally. So this is going to be the best price that's available for the entire season. You can purchase it by the end of the day to take advantage of that discount. And you don't need to take any action. The first step is really to just make the purchase. And then the LawCloud team and the LawCloud system will generate information from your Form C and information from your previous annual if you filed them into the system for you to review. So the first step is really on us, but the idea is that you want to get the best price possible by purchasing it by the end of the day. And then we will get started and reach out to you. I don't see any questions in the chat. Oh,
Yeah, there is one.
great. So Woody's email is in there. Benji's email is in there. She's happy to answer any questions about Form CAR. And I will send out an email to all participants with all of that information. I'm going to share the discount link in the chat right now to purchase, but I'll also follow up with an email. Last chance. Anyone have any CAR questions? Or Woody and Benji, if you want to jump in.
Peyton, there is one from about GAAP financials. So
okay, I don't see that. So go for it.
I'm not sure why, but I see it. So I'll go ahead and chat a little bit. So recognize that the same people that so lots of people are doing reviewed or audited financials to launch their campaign now because they want to take advantage of higher thresholds. Your original materials need to be in GAAP. So your auditing firm won't put your stuff into GAAP. So you need to find a local accountant that can convert your QuickBooks information into GAAP compliant materials. Now, this does take some cost, but it varies. And if you want to send me a quick email, I might be able to find you some resources to try to get you there prepared. So, but once you should have been GAAP for your offering, and so continuing to do GAAP is the best practices, and it will require some additional expense with your accounting and your bookkeeping. But I can maybe try to find you some resources if you want to email me.
Yeah, we can also refer to some accountants that specialize in Reg CF.
That's great.
Great, thanks, Benji. Anyone else? Any other questions? Last call for questions. Okay, great. All right, thanks everyone for joining us, and we will follow up. And Woody and Benji, thank you for your wisdom.
You're welcome.
All
Thanks,
right.
guys. Thanks, Peyton.
Yep.
Good luck, everyone.
Thanks, Peyton. Thanks, Benji.
Bye, guys.
Bye.